I've been thinking about some planning opportunities around the proposed changes to business property relief. At the moment, if you hold shares in a trading company and you qualify for BPR, there is no inheritance tax. If they don't qualify for BPR, potentially you're paying inheritance tax on death at 40%. So it's a very big cost to an estate, which in theory could mean the company either has to be sold, you have to get finance, which is going to stunt the growth. So I'm not entirely sure about the policy intention behind bringing trading companies within an inheritance tax estate, but that's the proposed changes. The planning I'm thinking about is using freezer shares and growth shares. So let's assume we have a company with 100 ordinary shares. Let's assume it's husband and wife and the company's worth £10 million. Husband and wife own 50 shares each. We're going to convert 10 of their shares into freezer shares. So we're going to have ordinary shares which will benefit from any growth in value. The freezer shares will be capped at £1 million. So whichever spouse dies first, they'll hand their freezer shares down to the next generation. That next generation is going to inherit those. No inheritance tax because we've got a capped £1 million BPR, and that's the maximum amount of value of shares can be. There's a CGT base cost uplift as well. So if they were to sell their shares in the future, instead of the £1 that they paid on incorporation, the next generation now has a £1 million base cost. So we've got a double benefit, no inheritance tax, CGT uplift. The other 40 shares, which are, in my example, if it's worth £10 million, potentially worth £4 million, goes to the spouse, the surviving spouse. And that's because when you gift shares to spouses on death, or any assets on death to a spouse, there's no inheritance tax. So spouse one dies, no inheritance tax, CGT uplift on that £1 million worth of shares that they've handed down to the next generation. Spouse two is now going to start gifting the ordinary shares to the next generation. This has to be sort of family matters really. Anything that's not family, if it's to other employees, then there's going to be employment related securities problems and potential income tax charges, or definite income tax charges if they're worth anything. But the surviving spouse is going to pass as much value down via gifts to the next generation. As long as they survive 7 years, they won't pay any inheritance tax either, or the beneficiaries won't pay any inheritance tax on that second death. And therefore, there's no BPR. They can still hold their freezer shares because that's going to be covered by the £1 million BPR relief that they'll get. But they've gifted as much out of their estate as possible. So by doing that, we've got CGT uplifts, we've got no inheritance tax, and potentially a very tax efficient way of handing down to the next generation. Obviously, this is going to be vastly different for every scenario. We need to think about things like, okay, yes, maybe we do want to hand down to the next generation, but that planning is all around gifting shares on. There's no option of taking any cash out to fund living until the date of death for the original husband and wife. But potentially that's one opportunity to bring in the next generation without paying any inheritance tax and getting a CGT base cost uplift, which means it's going to save tax on the next sale for the next generation. As always, like, comment, share. It lets me know that these videos are well received, and if you have any comments or interpretation of this legislation, really interested to hear everyone's thoughts.